Hi, welcome to TQ Talks, where we talk taxes and tax-free living 365. Here are your hosts, Craig White, Sebastian Singh, and Patrick Augustin.
And we're here with another episode of TQ Talks.
And we are happy to be back, guys. This is 2023, and we're trying to get through it. If you have not been with us before, we are a tax and advisory firm. Our job is to help our clients reduce or the amount of taxes they owe or increase their refund all the time using Tax Planning 365. We also use life insurance as a way to help clients to build wealth for themselves now as well as for future generations, right? And with me, esteemed colleagues to the right and left, we have Mr. Patrick Augustin.
I'm here.
Sounds excited. You guys heard that, right? You're falling asleep. And Sebastian Singh.
Thank you guys for joining us once again. Of course, this is TQ Talks that you can find on all your podcasting platforms, and TQ Financial Services you can find on all your social media platforms.
He just went straight into that because we don't have sponsorship yet. So we figures we
It'll
go ahead and
come.
just
Call
run
us.
like right into it. I like that.
Shoot us a DM.
Yes, we'd be happy.
The one spot I'm looking for is
Oh, I'm so scared.
We're listening. I am.
He doesn't even know.
Dutch Pod.
Oh,
Dutch
we need Dutch
Pod.
Pod.
Oh.
The oxtail is calling.
But hold on. We have to specify Broward and 441. That's
Exactly.
right. Yeah,
Plantation.
yeah,
Dutch Pod
we-
in Plantation.
Listen, if we're pitching stuff, we got to get taste right. They
the patties and the
unofficially
soup.
right.
sponsor most of our
the soup.
podcasts.
A red pea soup.
Can
on
you guys
fire.
tell we're Caribbean if you can't? You know,
And we're
moving
from
on.
South Florida.
Oh,
so
my gosh.
This is where we're at.
Again, we're in the tax season. It's 2023. If you haven't, again, been with us before, we're going to try to give you as much as we can, especially now to understand what's going on. We got the questions, or we're talking to people, and, you know, most of these things are information that we're just trying to make sure you understand, or people ask us questions. This one is kind of funny because it's literally, before this, if you don't know, we have itemized and standard deductions, which we're going to talk about.
Right.
But the important part for this part was the change that the IRS said, hey, back in 2021 tax year and 2020 tax year, we were allowing people to directly put $300 or $600, depending on circumstance, on a 1040 as a deduction for their charitable contributions. So
Right.
in other words, they did not have to itemize in order to get it. Now, it is small numbers.
That was the limit, though.
Yeah.
Because back when,
Yeah,
Right.
you know, before that, you couldn't do anything. So literally, you know, you see these commercials that would say, donate your car, or give this to your church, or whatever, and people would be excited to give us documentation. We're like, we can't use it because you don't itemize. So when that came out, as petty and as small as it was, because it was tiny, let's be honest, it was at least something, right?
$20
Yeah.
here and there, but, you know.
I would say it was
and
gas
of course,
money. But
depending on
money.
the situation, right? Because some people would have benefited from giving their car or something, but very few.
very few. So
Very
for
few.
them to allow you to directly put, again, the $300 or $600 on the tax return on the
Was a
1040 was helpful. So it's important for us to know that's gone.
Right.
So then where does that leave us when I am a person who goes to church and I put my tithe and I say, hey guys, here's my statement for my $5,000 or $4,000 or whatever it is that I gave towards my church. And I figured this is important so people could understand the difference between itemized. I'll tell you what I'm going to do. Bassie, could you help us to do standard deductions? And Patrick, why don't you tackle standard? So Bassie, go first.
So the standard deduction is the amount the government gives you, or a limit the government gives you, depending on how you file, whether that be single or married filing jointly or whatever the case may be, that is untaxed. So it's free money, quote unquote. That's the way I like to put it. It's kind of misleading. But yeah, it's untaxed
Well,
until you make
it's
over a certain
untaxed,
amount.
or it's just reduces your taxable income.
True.
Yeah.
Because, well, you know.
I understand what both you're
601.
saying. Right,
601,
exactly,
right?
correct.
And now that limit has been reduced this year. So this year, married couples getting whatever. We don't even have to go into it, right? Anyway, it went down.
It didn't. Well, it does. It goes up.
It goes
each
up
year,
every year,
and I
yeah.
know what you're saying. So, but each year it gets shifted a little bit for
Correct.
every single category, guys. Every year, so the numbers are irrelevant. We're not even going to do that because every year the government's going to give you a little bit more to help you because of inflation and time and life and whatever. But the standard deduction, as Bassie is saying, and I like your cheat method.
Right.
It's free money. It is. Because we give these basic numbers and these are not accurate. But if a person made $100,000 and they on W-2 and they pay taxes on W-2 of $100,000, the standard deduction would then come in to say, "Hey, thank you let's say you're a single
For
person.
bringing in 100.
Right, and for paying taxes on it.
Right.
But we're going to chop off some of that. And
The first amount, whatever
Right.
that might be. If
and let's say it's
12.5, 25,
right, 12.9, whatever
right.
the heck it is. Let's pretend it's 13 to make it easy. When that 13 goes against, it's a negative. It's like doing math. 100,000, write it down, minus 13,000 leaves you with, what is that, 87,000.
So that's the amount you'll be taxed.
Right. So then people get a refund because the government says, well, you paid taxes on 100. You were only supposed to pay taxes on 87. Here's some money back.
Right.
Now
here's the overage that we receive from you throughout the year.
Right.
Again, that's on a W-2 employee.
Yeah.
Yeah. I mean, we're talking perfect.
Yeah.
Super basic, extremely black and white.
But that is free money. If you guys don't understand what Bass keeps saying, like, again, that free money is, listen, y'all didn't work for that. They're assuming crap is happening in your life, and we're going to give you that
the whole
deduction.
point is for you to live.
Right.
Right? It's for listen, take the standard deduction. This is the amount that we're going to give you for you to live. And then anything over that, we're going to start taxing because, it's America. And we got to keep up everything.
And that amount has pretty much doubled since the Tax and
The
Jobs
standard
Cut
deduction
Act.
has doubled.
Yes, since the Tax and Jobs Cut Act in 2000, I believe, 18.
Right.
And so that brings us into the whole itemized section because, again, I'm back on my church giving, my 4,000 or 5,000, and I give it to Sebastian, and Sebastian looks at it, and what do you tell me? Can I use it?
Can't use it.
Oh,
Doesn't even make
what?
sense. You have nothing to push you over that standard deduction.
Exactly.
But should people be angry about that?
You can be, but if you look at the numbers, you're probably better off.
Exactly.
Most of our clients, the gross majority.
I'm going to add to
are
that.
better off.
You can't be angry because you made a donation to the church.
I can be angry.
You gave that to at your free
Jesus
will.
told me I was going to get a refund.
You don't have to give it, but you chose to give it. So
why did you?
Just
what
don't
was your
expect
goal?
Don't expect something back because you gave.
There you go.
That's
All right,
it.
so that's important, right?
That's
so
it.
if your goal was to give and get some credit back on your taxes, don't expect that last.
We need
part.
a church like music button on here because that just we went straight from taxes. Pat, we appreciate your wonderful giving attitude, and he's right though. But the bottom line is, you're giving not for a refund. You're giving now. Again, lies, because if you do tax planning with us, we're probably going to help you to give a little bit more
we'll
in order to
direct
reduce
you
that. But that's
according to your file.
correct. That shifts us into your side, Patrick. So now Sebastian just told me my 4 or 5 grand that I gave to my church of Greater Mount Bethel Baptist Church of XYZ,
A mouthful.
right, doesn't give anything for me. So what happens when I itemize?
The other side is if you are able to itemize, if you own a home and you pay property taxes, you pay homeowners insurance, things of that nature. Now that $5,000 donation to the church could come into play.
Okay. Why?
If you exceed the standard deduction
We're
according
back
to
on
what
that
you
number
qualify.
again. Okay. There you go. Well, that's what you got to help people understand. So he's saying that when I combine my, mortgage insurance,
property taxes, and your donations.
plus and mortgage insurance premiums does clear. If it's on that 1090-80, yes, that's the form we're
putting
telling
it
you.
in.
It's there. We add it, and don't listen. The IRS can change their minds. I think 17 or 18. We were all trying to figure out what year it was.
And
they
you know
literally
what?
changed it in the middle of the tax
In the
season.
middle of the season.
You could also add medical expenses depending on if you clear it, depending on your income.
Correct.
Level.
No one
So
says
there's
that.
things there.
Yeah, it's a combination of different calculations we can use. And when I say we, I mean TQ Financial tax preparers.
Exactly.
But we'll guide you in the proper way.
Right. So the point is on itemized deductions, my goal is to exceed, we're rounding again, it's 12,009 and change, whatever it is, exceed the standard deduction that the IRS gave me. And if I get more of that by using the mortgage insurance premium, property taxes, mortgage and whatever the other
Mortgage
stuff was.
insurance premiums.
I don't remember all that
medical,
stuff.
just a few
Medical,
different things,
charitable
yeah.
contributions. Then I am going to be in a better place, right? Because again, we're using single, 12,950 is the exact number. If I get 12,951, then I'm better. So I use itemization to file my taxes because it reduces my
taxable income.
right more than the 12,950. I got $1. So then our job is now to pitch and figure out what else is there so we can get that 12,951 to like 19 or something.
And
Yes.
these are the questions that we would be asking. That's a lot of the times why we have to know, or we ask the questions to kind of dive into your personal life and like really get past just the forms.
Right.
Is to figure out what's missing and what we could bring in.
Right. And the reason we're like moving past medical, I guess things, I was blurring like medical, boo. Medical is hard. Right, I think it's like 7.5% of your adjusted gross income.
Yeah,
And
exactly.
listen, guys, it's unless you have serious medical conditions, we appreciate it. But I know a lot of times people give us, here's my prescriptions and this and that, and you're not going to get there. It's very hard.
We do have
I
clients
bring it up
with
because
IVF and different
Yes,
things of that
and,
nature.
and diabetes. I'm trying to remember. Sorry.
dialysis.
A lot of clients have dental work.
Right.
That you
Can
Sometimes.
be expensive
Sometimes.
really
Exactly, yeah.
quick. Yeah.
Or if you're a stripper and you redid your boobs, that does count.
That also counts.
Seriously.
I
Like,
didn't
I
see
know-
us going there, but
But yeah, well, the
No,
reason I
it
say that
counts.
is because
That's
it
true.
depends on your profession, right?
Yep.
Some people decide not to do things. It's like, dude, if it fits, it fits.
Right.
So again, it is what it is. But all this was centered around helping you guys understand the difference between itemized and standard. Don't be upset if you do not meet the itemized deduction threshold, because the standard deduction is pretty doggone big. As a matter of fact, I think I forgot the number. 90%, was it? We were
Yeah, it was
reading
90%.
90% of Americans used the standard deduction back in 2019, and guys, it's going to stay that way unless you are buying a very big house, or it's really hard for you to break that number because they're giving you so much. And so it is what it is. It's not a bad thing. We're just taking whatever number is bigger. Either way, it's going to reduce your taxable income, like Patrick keeps saying, and put you in a better position. So again, just food for thought, so you guys can hopefully understand that if you don't see it showing up, if I don't see my church stuff showing up on my tax return, you guys give it back to me, I won't be upset. 9 out of 10, of course, we'll tell you, but most people don't remember. We didn't use it, Craig, because you got way more from the
Using the
standard
standard
side. And it's okay.
That's
It's
it.
okay.
So let's get ready for this tax filing season.
Yes, we should. And listen, any questions, you guys know, 800-413-1456.
Call us.
It's tax season. Get us all your information. We have our mobile app. If you don't know, download it wherever you get your mobile app stuff and mobile platforms. I don't even know those things called. You're downloading.
The App Store.
There you go.
Like,
you guys
share, and
are tech
subscribe,
people. There you
guys.
go.
Like, share, and subscribe. We're on all social media platforms, as well as having our app, of course, on both of the platforms. I think it's Google Play Store and App Store.
That's correct.
And, of course, on all social media platforms, we're there as well. So it's an easy way to find us.
That's right. And again, we look forward to having you listen in and join us for our next episode
Of TQ Talks.
And we're out.
Thank you for listening to TQ Talks. If you enjoyed the show, please rate and recommend on iTunes, SoundCloud, or wherever you get your podcasts. You can also get more information at TQFinancials.com.